Good morning. Ira Epstein with your morning flash update, and this update is for the morning. As we're sitting here now on Monday, and this is already the 27th, believe it or not, of March 2023, time 8:25 a.m. Central Time. Well, the one evident thing is it's a risk-on day. The banking system had no hits over the weekend. In fact, there was some good news. Let me get to that, and then we'll take a look at everything else. First at 10:30, we're going to get the Dallas Fed manufacturing activity gauge. But the banking news is the FDIC last night announced that First Citizens Bancorp has agreed to buy Silicon Valley Bank. Now, not the whole bank. They're buying a big chunk of it, however. The FDIC will take about a $20 billion hit. You heard what I said. That'll be the loss. There's other parts that have to be sold. The bank didn't take everything. But this chapter has gotten behind us. Now the question is, are there other shoes to drop or not? For the moment, there aren't. So when we step back to the market, we see a risk-on play taking place. You're getting a bid in the stock market. You're getting offers in the gold, the silver market. Copper's down a bit, but I'm not convinced that that has anything to do with this more than a day up, day down. We saw news over the weekend that China's manufacturing sector lost a lot of money in January and February. That should not be a surprise. We had still the COVID, the zero tolerance going on right into that time frame. Then we had, if you'll recall, the lunar holiday. Now that they're coming out of it, the numbers from, I would say, mid-March on should be a big improvement. That's my guess. Dollar index down as a number of the currencies are starting to get a bid through here. We'll see if they can hold up. And with that risk on, well, the pressure comes right on off the energy market, and you're getting a bid in both crude and Brent. Gasoline, I like the action here. The market is getting a pattern of higher highs, higher lows, getting away from a problem. Nat gas is different. This is that bad time of year where you don't get bullish or bearish news and there's no real draw taking place. They try to rally early on in the grains, and unfortunately it's not holding up real well. I don't know what to say about that. As I said, it's a risk-on environment, so you don't have to see the buying in the bonds and the notes. So you put it together. Today's going to be one of those good days, but I'm warning you, a big update today in some of these markets could lead to a Tuesday reversal. It's very typical. So even a big down in the bonds and notes could lead to the reversal of that. So just keep your eyes on all this to see if that's what occurs by day's end. Now, this is probably a day where the pivot points are going to do a lot of good. I say that because when you get these early rallies or early breaks like you're getting in the market, you'll hit what's called the buys and the sells early on. Then the question is, does the market become overbought or oversold? If you haven't used a pivot point ever, just think of it this way. You get a center line. There's a formula. You have it probably in your charting software. Look up pivot points. Then you can set where your buys and sells are, how many of them you might want to get on that. The idea here is that you're looking for the pattern where the market gets up to the sells, it'll get back to the pivot, or down to the buys, back to it. What I do different is I time it with the slow stochastic study. When I put that into it, I feel it gives you an edge. It's a little different way of doing it. It's a free, I want to use that word, free video series. Yours to see how we teach in our other charting packages. So how do you get this? Go to iraepstein.com under free offers and move your cursor up here to the free offer section. You'll see an icon pop. Give it a click, and that's it. I'm Ira Epstein. I'll see you at the end of the day with our market wrap-ups. Good trading to you.